Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Monday, June the 14th, 2010. Well, a continuation of the trend to the downside, and we have a candle with a lower high and a lower low. This time it's a red body candle, and that reflects the fact that the sellers have made some net bearish progress on the day between the open and the close. Unfortunately for the sellers, they were unable to close the market below the midpoint level. So they've failed to close this market in control. By the same token, the buyers have also failed to close this market in control. So neither side has taken control of this market. For the bears, though, we have this very long shadow on the bottom, and that represents upside price rejection. It represents buying coming in. And it shows that the sellers have lost commitment throughout the trading day. They were fully committed as they were trading the market down at the lows, but then they lost that commitment and gave in to the buyers who closed the market back up just above the midpoint level. Now, there are some candles here where we had some strong upside price rejection previously around the 86 level, and there were 1, 2, 3, 4, 5 candles here with large shadows, and that represents buying coming in, and that's what's happened once again. However, the bulls weren't strong enough to close the market up towards the highs, so that does raise some doubt about a potential change of trend. Now, this is a potential Japanese candlestick reversal pattern. It's a hammer pattern, and because there is potential for that, we do need to watch the high of the current candle for a potential higher high and higher low. And the reason that that's a potential reversal pattern is because of the long shadow on the bottom, representing the loss of commitment from the sellers on the trading day. Now, just looking at the Kijun-sen here as well, the Kijun-sen has turned flat, and that tends to be an attractive price action, and that's what's happened here. The market has been attracted back towards there. So there is potential for the market to test this 86 level and just beyond it, this 85, 81 level again. So there is potential for that to happen. We need to remember that the trend is down. It's to the downside, and that will continue until we have evidence otherwise. Now, the market is trading up above the cloud, so the market is still in an overall bullish trend in the large time frame, in the long-term time frame, and we're having a medium-term and short-term retracement of that trend in the bigger time frame. We can see here from the swings of the peaks and troughs that the market is trending up. Now, the market has broken out previously from this ascending triangle, and we had a target around 89. The market failed to go on with that. So that target has pretty much failed now as the market has traded within to the pattern and expecting to find some potential support here. Now, if the market fails to find support around the 86 to 85, 81 region, then there is a few swing lows down around here, roughly 85.12, coinciding with roughly round number 85, where there was previous resistance and then support. So there is potential for support there, and certainly down around the cloud, coinciding with around roughly this 83.22 region, there's potential for support there. So this area here through the low down to the 85.81 to the 85 region offers good strong support, so we do need to watch that area. And also watch the high of the current candle for a potential change of trend, with market making a higher high and a higher low, and potential for the market to test the 88 level.